Hey, this video is on Snowflake's earnings. They just reported earnings the other day. Kind of see where they're at going forward. Also, what the current valuation is with the new data we have right now. So overall, Snowflake's earnings were very mixed. Revenue did beat by a tad, roughly $9 million in the quarter of Q1 2023. EPS, or earnings per share, was a tad missed. So it's really mixed results overall. But let's go to the financial model and kind of look at it behind the scenes. So this is the same financial model I showed in my previous video. I made tweaks based on updated guidance, updated data. Basically, everything you see in green is positive. Everything you see in red is bad, or it's basically trending worse. Everything you see not touched basically is in line with expectations overall. So first things first is top line revenue. And we're roughly saying about $2 billion this year in 2023 of combined revenue. That includes services revenue as well too. I'm saying growth right there, 65%. We're seeing gross profit here of $1.3 billion. Basically a 65% gross profit margin, which is absolutely fantastic. I mean, that's very, very good for any basically software company. So long-term future, by 2029, they want to get the basic revenue to $10 billion. That's kind of their long-term goal they have. Gross profit will follow that pretty heavily. I mean, you're going to also see gross profit margin probably increase to 70% plus kind of range, 72, 73% roughly by 2029. Now, you might be wondering, because you might look at the actual financial kind of presentations they have. They actually have, gross profit percentage at 72%. So this is an example of that right here. So you see like Q1 FY 2023, 72% for basically GAAP product gross margin, and you're thinking, hey, like how is 65% in the actual financial model? As you can see right here, really what's happening right now. So this is actual just product gross profit, not the actual services revenue gross profit. So you see services revenue right here. It's a small line. It's not much revenue, but the problem though is it's vastly negative gross profit margin. It is absolutely burning cash for that entire line item. So I gave you an example basically of Q1 2023, what I'm talking about here. So right here you can see product revenue of $394 million in Q1. You can see services revenue of $27.9 million. Profit margin, we know they was 72%. That's what they told us earlier. We also know the total is 422. We know the total profit margin is 65, roughly 65%, give or take, which you can actually use. Actually go in their actual filing itself, and you can see right here. You can see the revenue, the gross profit margin, basically abstract, hey, roughly a 65% gross profit margin right there. So basically, you can do a little bit of backward math there and figure out, hey, professional services revenue itself is at roughly negative 33%. That means for every dollar they kick in revenue on the professional services side, they basically burn $1.33 basically of outbound cash, basically on the actual entire revenue line item. So I went and dug out what is professional services and what does it actually mean for Snowflake. This is actually one of the risk factors. And this is from the last annual statement they had. So it's basically saying if we are unable to unsuccessfully manage the growth of our professional services business and improve our profit margin from these services, our operating results will be harmed. Basically what it's saying is this negative 33% margin, if it gets worse, if it goes like negative 50% or negative 75%, I mean, it's going to get massively basically dilute their overall gross profit margin across the entire company itself. Let's look at what it actually means with their actual terminology. So our professional services business, which performs implementation services for our customers, has grown as our product revenue has grown. We believe our future success depends in part on investment in professional services to facilitate the customer migration from legacy solutions and adoption of our platform. So basically what it's saying is it's migrating customers from on-prem databases, on-prem data solutions or data warehouse solutions to the actual Snowflake cloud itself, which is absolutely vital for them. This makes sense. This is almost like an initial CapEx you hit to help you migrate a customer from a competitor solution to the actual Snowflake cloud itself. So, which if you have a long-term customer here, let's say 5, 10 years and beyond, this actual initial revenue hit or this initial gross profit hit won't matter in the long term. What's the really big fear I have, the big issue I have is someone migrates to Snowflake cloud. They realize it's too pricey. They don't want to be there for long. All of a sudden they migrate away from that cloud and you still have that massive CapEx hit from the professional services side of the business here. So again, it's a risky play, but it's almost necessary play though too to help kind of minimize initial CapEx from migration just for any cloud database in general. So looking at OpEx here, it actually wasn't too bad. It was, the only thing I saw bad was really sales and marketing. I mean, I would thought this would be more in the $900 million range. It's creeping up to $1 billion plus, and it is growing. So basically, as it gets more competitive, as the market kind of slows down a little bit, they're getting more competitive with their sales and marketing, but overall spending itself there too, which that should drop as a percent of revenue over time. If it doesn't, I mean, they're gonna have overall bigger issues. Looking at G&A cost, general administrative costs, it was more positive than I thought it would be. So again, that was a positive development for OpEx expenses. R&D was right in line with what I thought it would be. But looking at overall here, down in operating income, this is after all the OpEx expenses. I mean, it's still massively negative for the year. It should get better. And I'm saying, hey, by 2026, there is a chance for profitability here. Really, the big risk factor you have is really the revenue growth rate up here. So if the revenue growth rate maintains the projections like in this model, they're going to be okay. If this starts falling off, and we start basically having a recession, basically, in 2020 or FY 2023 or 2024, I mean, this is going to be a much lower number overall, more than likely. So there'll be basically a longer path to profitability for Snowflake. Looking down here, overall interest and overall, basically tax provisions. Again, it's very negative. But again, look at here, like in FY27. I mean, there's a chance here where, I mean, once it ramps up and once it breaks even, I mean, it could ramp up fast and become very profitable very fast if everything else maintains the status quo. So what I did here is I did a basically a DCF with a Gordon growth exit. It doesn't really matter about that, but really what you can see is all the actual value of the company itself is really in the terminal value, which that's why right now it's very interest rate sensitive. So as the interest rates come down, the value of the company will go up, and as the interest rates go up higher, the value of the company will come down, and this will be like dramatic moves overall. But looking at this, according to my assumptions, I'm saying right now fair value is 151.89. Again, this is very interest rate sensitive though too. So if I go to the discount rate here, and this would make this 7.5. All of a sudden, you see the value could skyrocket there too. So this is one of those companies where, I mean, if we basically get past kind of the inflationary fears, interest rate fears, potentially a credit crunch fear where, banks or something else starts failing, or, they say there's credit issues overall, and all of a sudden rates skyrocket for corporate debt, this will actually, be a lot better for them. But again, right now we're kind of in that risk off period. So again, this is not going to change as much. I think there's still definitely some downward pressure on the stock itself, just because right now, risk assets or like non-profitable companies right now are just getting crushed across the market in general. But we'll see what happens with Snowflake. Long term, the value prop is definitely there. We'll see if they can execute. So I also want to share a couple quick thoughts from their Q1 2023 investor presentation. So as you can see here, I mean, they still have a strong revenue growth rate. Remember, this dark blue is professional services revenue. It is vastly negative gross profit. The light blue here is their 72% gross profit margin for their actual product revenue, which is the vast majority of the revenue itself. If you see the blue start growing as a percentage or as a proportion of the total revenue stack, be a little nervous there. I mean, just know it's burning a lot of cash. Customer commitments, this is actually kind of bad. It's basically flat, Q4 over Q1. You want to see this growing over time, but again, this was a pretty rough chart in my opinion. Customer momentum right here, and it's still growing. They're having the upward trend overall too. But I mean, look at the growth rate, quarter over quarter. Obviously there's some seasonality here though too. But again, it's not growing as fast as it was. You're gonna see, FY24. You're gonna see a much lower growth rate for these companies overall too. Basically, as they grow in size. Also, too, looking at strat accounts, these are like large scale, like enterprise level customers globally across the board. Again, I mean, it's, FY 22, we're growing pretty fast, roughly over, quarter over quarter. I mean, FY 23, it's just not growing as fast as it once was. And that's really the big fear you really have is like a Snowflake overall slowdown where people are still consuming it, but it's not growing as fast as it once was in FY 21 and FY 22. Retention rate, this is actually I think the biggest red flag for Snowflake itself. I mean, you're seeing the dollar-based net revenue retention rate, it's actually dropping. So we were rising the last 4 quarters, and we actually had a dip actually in Q1 of FY23, which again, this could be a temporary dip, basically a blip in the overall kind of the revenue growth cycle. But again, if this is a long-term trend though, I mean, that's going to be very bad. It's going to reprice a lot of these actual future long-term growth and long-term assets they actually have potentially for the revenue growth rate. Hey, but that's Snowflake. I mean, overall, it's a really mixed bag right now. I mean, really, it's getting beat up by interest rate fears. But again, I think the long-term value is there. And really the question is, how high does it go basically after this kind of, recessionary, kind of contractionary fears we have right now. But yeah, be sure to drop your thoughts on Snowflake in the comments down below. Also, be sure to sub the channel for content just like this. If you have any future ideas for new videos, for like, fundamental analysis, valuation videos, etc., be sure to drop those in comments as well, too. But yeah, that's the exchange.